All right, guys. My name is James Seyffart. I write research about the asset management industry. In the last couple of years, I've spent a lot of time writing about digital assets and digital assets ETFs. Robbie here is famously known as the guy that orange-pilled Larry Fink to some people, so we're going to get into that a little bit. But to break the ice, I guess, can you tell me how much Bitcoin do you hold? Or a Larry, how big are Larry's personal bags?
Yeah, believe it or not, I've never asked him that question.
Let's dive in here a little bit. Let's get a background on you. How did you get involved in the digital assets, Bitcoin space? What was your journey like? Personally?
Well, I started in this space in 2017, frankly, by pretty fortuitous circumstances that ultimately led me to BlackRock in August of 2018, where there was an opportunity to come in and help them figure out this whole blockchain and digital assets world. And the rest is kind of history. It's been 6 years now. It's been a pretty fun journey. Obviously, as a firm, we've come a long way and built a number of solutions, not just, IBIT most famously, but across crypto, stablecoins, tokenization, what we've done in this space, all kind of in the name of bringing greater access for our clients.
Yeah, I noticed you left off the part where you actually worked at Ripple for a little bit. For this audience. You're a reformed shitcoiner, I guess we could say. Can you talk about, so you joined in 2018. In my mind, I go back to Larry Fink, CEO of BlackRock. He famously called Bitcoin an index of money laundering. He was famously against the whole space, but he hired you to do digital assets. So what was that process like from 2018, where even in 2021, he was saying relatively negative things about the space, to being one of the most full-throated endorsers, biggest names, believing in Bitcoin and digital assets more broadly? Were you really the guy that orange-pilled Larry Fink, or was it more a general, larger process?
Well, I think Larry deserves a lot of credit for the time that he spent studying this space, being curious and open-minded, which he absolutely was, right? And when you think about Bitcoin, there's very few people who the first time they ever hear about it, they immediately say, that's the thing, right? There's some exceptions, but for most people, it takes some time and study. And I think, if you look at Larry's case, I've often said that if you are a student of financial history and geopolitics, or you are a technologist, Bitcoin tends to come more easily. And Larry is very much both those things, right? So that, I think, partly explains how he's become a really, really insightful kind of thought leader in the space.
Yeah, I would say I'm actually one of those people. My first experience was a college roommate in 2011 put mining software on my computer, and then it broke my computer, I'm convinced. So I didn't start taking it more seriously. It took me 5-6 years after that before I started thinking it actually had real potential. But I guess, can you talk a little bit about what the conversations were like internally? Was there a group of you internally that were bullish on the space, wanted BlackRock to enter the space? And obviously, from my own personal experience, there's this divide within even Bloomberg in my company. There's people that are full-throated believers. There are people that are kind of neutral. And there are people that are vehemently anti. So I guess, what was that conversation like? And what were Larry's reservations? And what were BlackRock's reservations before you guys really started getting into the space?
Yeah, I think in early days, the greatest opportunity lay in thinking about how we use this technology, right? How could this technology make our business, make our financial ecosystem more efficient? How could it serve clients, and how could we play a role in providing clients solutions and products in this space? And then over time, a number of critical factors kind of came together to support the major moves that we ultimately made. One was you had generally increasing, not obviously full-blown clarity from a reg standpoint, but from a regulatory standpoint, around the world and in the U.S., it became increasingly clear that there was a view this was an asset class and a technology that was here to stay, right? And that was an important shift. Second, you had a great build-out of infrastructure, of institutional-grade infrastructure, particularly starting in 2020, that ultimately was necessary for players like us to get comfortable participating and building products that we felt would be of a BlackRock or an iShares quality standard. Then the third piece was our clients continued to be more and more interested. And we're a very, very client-led firm. And so that signal of client demand was kind of the final piece that helped push us over the top.
Yeah, I will say this obviously has been a huge success for you. IBIT, the Bitcoin ETFs in general were the biggest ETF launch in history. IBIT is arguably, as an individual fund, the most successful launch we've ever seen in history. They are, it's a big part of BlackRock as a firm, not just like, I think it's over 25% of your flows this year have come from this ETF. It's the second most successful fund so far in 2024, behind the S&P 500 ETF, and not that far behind. I think you're about $20 billion in inflows or $17 billion in inflows. I guess, what is that like internally? Like, I assume, like I said, there's probably some people that aren't huge believers in Bitcoin, and they're seeing this like drive a lot of the narrative. You're getting a lot of media coverage. Can you just talk about like what this product has meant for BlackRock as a whole?
Yeah, I think obviously it's exciting when you launch something and it meets and even exceeds the very high demand expectations that we had for it. I think the interesting thing, though, James, it's very early. That's what a lot of people don't realize is if you think about our iShares business and the three main channels that we ultimately have as sort of client segments, the first is end investors direct. And that spans everything from small dollar retail to even high net worth, ultra high net worth, investing on their own accord. Then you have wealth advisory, and then you have institutional. And of those three, the first being an investors direct came storming out of the gates. January 11th, they showed up. The demand was immense. It has continued in many respects for the last 6 months with pretty robust flows. But when we talk about wealth advisory and institutional, those are much longer journeys, and we're still only partway down that track. So when it's institutional, there's a major education, diligence, research type effort that happens when you have a new asset class emerge like this. They're going through that process. We're playing a role in supporting them on that journey, but I would say it's early days. There's a few big institutions who've allocated, but they're the minority so far, for sure. And then wealth advisory, one way to think about wealth advisory, you can be fully restricted, and there's a couple platforms where these ETFs are still fully restricted, not many, but a few. Then where a lot of them are is called unsolicited. And unsolicited means that a client can specifically request, I want to own that ETF, and the platform will make them sign some disclosures that they know what they're doing, and they'll place the trade. But where most of the wealth advisory space in the broader TradFi landscape is what we call solicited. And solicited means that the advisor is actually directing what assets are held. And effectively, none of the large wealth advisory platforms today have yet gotten to that point of offering IBIT or the other Bitcoin ETFs on a solicited basis. That's a journey that many of them are on. Typically, that takes multiple years for a new ETF to get to that solicited status. Many of the largest platforms are accelerating their efforts to do so, but we still actually haven't had the first major platform get there.
So there's another wave coming, is what you're saying. I mean, if I had a Satoshi for every time I saw an article or a tweet or a rumor that Morgan Stanley was about to approve these things for a solicited basis, I'd have a lot of money. So, like, you're saying a couple years, but you think they're accelerating. Like, give us a rough timeline. And the firms, to be clear, the firms we're talking about here are the Morgan Stanleys of the world, the UBSs, the Merrill Lynches, these big wirehouse wealth platforms that are only working on an unsolicited basis. But, like, do you think fourth quarter is on the table for some of these? Are you thinking more into 2025? Like, where do you think a timeline, if you had to throw a dart at a board and guess, when do you think the earliest that it could happen for one of these big wirehouses?
I won't get into specific names and timelines, obviously, but certainly this year is likely.
Okay. And then, so these wealth advisors, you do have some wealth advisors, specifically the smaller, more independent type wealth advisors have already allocated. They don't have to go through this long process. They don't have hundreds of billions of dollars that they're worried about allocating to the wrong thing. The ones that you do have access to, how much insight do you have to what they're doing? And if you do have any insight, like how are they pitching it to their clients? What type of allocation are they doing? Are they doing 10% allocations? Is it more like 5%, 2%? Like, what are you guys seeing in your conversations? And you guys are having thousands of meetings a year with these types of advisors. So if anyone would know, it'd be you.
Yeah, I think, and that's right. We are, particularly that RIA channel, registered independent advisors, lots and lots of conversations the last 6 months around this. And, there's no kind of clear number that a particular firm or advisor is using, but I would say in that advisory space, the most common allocation of those who are allocating is probably in the 2 to 3% range.
All right. Makes sense. Let's get into BlackRock's view, or maybe even just your own personal view on Bitcoin, the asset. I mean, I tend to say it acts a lot like a risk-on asset. It's an aspiring store of value asset. It's aspiring to be a risk-off asset, and at times it has shown to be risk-off. But what is the house view? And two, how are your salespeople, how are you guys pitching it to advisors? Like, is it a diversifier? Is it an alternative?
Right.
Let's get into that a little bit.
Yeah. Well, I actually think that this is probably one of the most muddled conversations in this space. And in some ways, it's a massive own goal that the Bitcoin, sort of punditry commentary community has scored on itself in defining Bitcoin, or allowing Bitcoin to be defined in some circles as a, quote, risk asset. And the reason I say that, one, I think it's fundamentally inaccurate, and two, it's massively unhelpful, which we can get into in a second. But first, the thesis on it. So if you look at Bitcoin's trading history, what you'll see is that, and this is on a fundamental basis as well, there's one macro risk factor where Bitcoin is highly exposed and highly correlated to so-called risk assets. And that is that Bitcoin is massively short real interest rates, right? If you think about that, that makes sense. In the same way that gold is short real interest rates, same way that emerging market currencies are short US dollar real interest rates, and also in the same way that technology type long-dated investments, which their payoff is in part envisioning a future state where growth happens, are short real interest rates, right? But outside of that, there's actually very little fundamentally that Bitcoin has been correlated on. And that's why when you look at it over a longer horizon, over its history, that long-term average correlation is a lot closer to zero, right? When we think about other fundamental drivers of risk and return, they're very different from equities or fixed income or other traditional assets. This is a non-sovereign, scarce, decentralized asset. And to the extent it has risks, of course it has risks, it is itself a risky asset on a standalone basis, right? But those risks are about uncertainty over future adoption, regulation, the development of a still early ecosystem, right? They're very different from banking crises or geopolitical disorder or inflation, deficits, debt, currency debasement, all those types of fears and risk factors that exist out there in TradFi world. So in fact, when you think about Bitcoin as an asset that has no counterparty, isn't dependent on any one country's fortunes, and is ultimately a scarce asset. That's why you've started to see this shift where people look at Bitcoin as a potential flight to safety asset in some of these other dynamics. So when people use this risk on, risk off framework, all that nuance gets lost. And I think that nuance is really important.
You heard it here first. It's not a risk asset, according to Robbie Mitchnick. I guess one of the other things I often hear, and I tend to believe, and when I talk to advisors, which I do a decent amount, is this volatility is actually more of a feature than a bug, particularly for people that are rebalancing. So if you have a target allocation, like you said, that 2 to 3% range, if it goes up 100%, they're going to sell some of it. But if it dips a lot, they're going to buy, and that can smooth out returns for a portfolio over the longer term. I guess, like, are you seeing that rebalance? We've seen some volatile days. We saw a lot of people said that these ETF holders were going to run at the first sign of
right.
of bearishness. That we had Bitcoin go down 25%, and not only did they not run, they poured in. They bought the dip. So, I guess, are you talking to advisors that are like trying to figure out when they should be buying and selling these things? How much of that's going on?
Well, I guess to the first part, before we'll come back to volatility, it's been quite remarkable the degree to which these ETF holders so far have been of a very long-term buy and hold nature, right? If you think about since January, there have been some pretty big pullbacks in Bitcoin. IBIT has had 1 day of negative flows in 6.5 months, right? And in fact, on a lot of the down days, we've seen net buying, where our investor base is so-called buying the dip. Of course, that'll change over time. I'm sure we'll see in the second half, or in the years to come, we'll see lots more negative flow days. That's just natural, right? But pretty striking how consistent and long-term the investor base has been. On the volatility point, I would take the other side of that. I think, obviously, there are traders and hedge funds who love the volatility in this space. But for your typical institutions, for your wealth advisors, for lots of regular everyday investors, that is definitely not a feature. But thankfully, for those types, what we've seen over the long term is that Bitcoin's had a pretty steady downward trajectory in its volatility. Today, it is absolutely still a volatile asset. But it's actually, some people don't realize, you have a lot of major tech names that people hold a lot of in their portfolio, even just by holding index funds, that are more volatile on a standalone basis than Bitcoin is today. I think what people look at more closely, and this goes back to the risk on, risk off point, and why I think it's so important that people understand, the ways that Bitcoin does not fit that paradigm. I was speaking recently to a friend who's in charge of strategic asset allocation for a large institutional allocator. And he said, the only thing I'm looking at is correlation. I see that correlation go back down towards zero and stay there. It's a slam dunk investment case for us. But when it's elevated, it's a much higher hurdle.
So let's shift gears a little bit here to something that a lot of people in this room won't really care about, but it's relevant. You guys just launched an Ethereum ETF 2 days ago. This is its 3rd day of trading. Can you talk about what the interest you've seen from clients? Obviously, we've seen the flow data. Yesterday was mostly flat. There was 100 million in net flows that came in the first day. There's a lot of trading. Can you talk about the interest that you're seeing for ETH when it's relative to Bitcoin? I guess how is that interplaying?
Sure. Well, I would say that our client base today, their interest overwhelmingly is in Bitcoin first. And then somewhat in ETH. There's definitely interest in ETH too. And there's very little interest today beyond those two, right? And so that you can map that to the approach we've taken, and I think it makes sense. What we've stressed with them is we don't view Bitcoin and ETH really as competitors. What Bitcoin is trying to be as a global monetary alternative, as a potential global payment system, ETH isn't really trying to be that, right? The whole store of value use case within crypto, I think, is pretty definitively territory that Bitcoin owns. ETH is trying to do a bunch of different applications that, for the most part, Bitcoin is not trying to do. So really, they're more complements than they are competitors or substitutes. I think our clients are seeing that.
Okay, and then I guess like who is investing in ETH, I guess, or like how are they investing? Do you think people are going to, if they have a 5% allocation or a 3% allocation, is that solely to Bitcoin? Are they going to sell some of their Bitcoin to buy the ETH ETFs? Or do you think if they're buying the ETH ETF, it's more as an add-on? Like is it going to take away from the Bitcoin ETFs or not?
It's still early days. I think early indications are it's probably more likely to be an add-on, that people will recognize that these are complements, not substitutes. You know, we saw the last couple of days, even with ETH launching, even with Bitcoin, price action down on one of the 2 days, we saw net creations into IBIT, not any outflows. So I think ultimately it's actually healthy for the ecosystem. I don't think we're going to see a long list of crypto ETFs. If you think of Bitcoin today, 55% of the market cap, ETH at 18, the next, plausible investable assets like 3%. So there's just nothing close to being at that threshold of track record and maturity, liquidity, et cetera, that Bitcoin and to a lesser extent ETH have. So
our estimates are like we think around 20%. We think the ETH longer term could do in relation to Bitcoin. What do you guys think is roughly the same, or what are your guys' expectations?
Well, I think most people's estimates kind of come out in that 20 to 25% range. Like when you look at lots of data points across the world, Canada, Europe, other product types, that ratio keeps sort of popping up. So, I think that's a pretty good guess for where that might land.
Let's go back in time to before the ETF a little bit. There was a news story basically about BlackRock's Aladdin partnering with Coinbase the summer before you even filed for the ETF. And it kind of went under the radar, aside from some real Bitcoin maxis that were like, this means BlackRock's going to go in full bore. And I was like, maybe, but Aladdin is like a portfolio platform. Can you just talk about like the relationship you have with Coinbase, how that came about, and like how that relates to what you're doing now with IBIT and ETHA and what have you?
Sure. Well, those were important early foundational steps that ultimately put us in a position to do the Bitcoin ETF. We started working with Coinbase in 2021 to integrate, at first, Bitcoin trading and custody functionality from Coinbase Prime into our Aladdin investment management system. And our Aladdin system is what not only BlackRock runs its asset management operations on, but also many of the other largest buy-side firms in the world. And we developed that functionality such that in the future, any BlackRock portfolio manager or fund or any Aladdin client fund would be able to trade, settle, custody Bitcoin within their existing operational and risk construct, which is super, super important for institutions. The other thing we did that summer of 22 was we launched a Bitcoin private trust, which ultimately was a precursor to what became IBIT. So we had built the technological capabilities, we had built the asset management capabilities around this over a period of multiple years that ultimately set the stage for us to build the iShares Bitcoin Trust in a way that would adhere to a BlackRock and an iShares quality standard.
Yeah, I think Scaramucci famously said when you launch that trust that this means they're going to launch an ETF. And we always kind of thought
he was right. It was a good call.
We always thought like it made sense. We thought BlackRock would ultimately launch a Bitcoin ETF, but we didn't expect you to be in the first wave. So you guys caught us off guard with that. We had 1% odds of approval in 2023 when you guys filed, and quickly upped it to 50% essentially as soon as you guys filed.
I know, so we blew up your vacation, if I remember.
You did blow up both of them. I was on vacation. Yeah. Can you talk about Aladdin and how you're fully integrated to buy and sell these assets directly? Like, how, if you have advisors or institutions, like, what is that conversation like? Should I just buy IBIT, the ETF, or should I go through Aladdin and buy the assets directly? Like what is the trade-offs that you're making between those two things?
So I think the Aladdin clients who want to implement a very extensive trading program, they're more likely to use the Aladdin access solution directly. And those who are in more of a sort of buy and hold type approach, the ETF makes perfect sense for them.
And then, so everything you're doing right now is with Coinbase. Your stuff is on the Coinbase platform. You obviously have a strong partnership with them. One of the things that I hear all the time is like people are worried about this concentration risk in custodians. One, is that something you guys are thinking about or are worried about, or are you just completely comfortable with the way things are currently operating?
Well, I think we're always navigating an evolving risk landscape in what we do, not just in the Bitcoin space. Obviously, we have a lot of faith in Coinbase. There was a pretty extensive diligence process, as you can imagine, that led to us selecting them as our first provider in this space. But we certainly think that over time, you will see more institutional grade custodians entering the space, and that's very healthy for the long-term growth of this ecosystem.
All right, so like what's next? Obviously, you guys have a Bitcoin ETF, you have an Ethereum ETF. You said nothing else really kind of makes sense. Are you looking at like getting more involved in the infrastructure play, doing things with mining? Like, is there anything else you guys are doing or you have coming down the pike that you're thinking about? Like, what's next for BlackRock? What are they most bullish on going forward? Aside from these massive platforms we talked about, allowing these things to be sold on a solicited basis.
Yeah, well, I think when we think about the digital asset space, we think about it across crypto, stablecoins, and tokenization as those kind of the three pillars of it. And there's a lot that we're excited about in the stablecoin space. We think that has the potential to transform many elements of our global payment systems, even thinking about how stablecoins can make value settlement more efficient in capital markets, in traditional capital markets. In the tokenization space, obviously we launched a tokenized fund earlier in the year. Is now the largest tokenized fund in the world. There's a lot there that's also exciting in terms of enabling greater access, democratizing the reach of investor types that can invest in more types of investment funds, as well as making the whole system more efficient and cost effective.
Yeah, I often say, like, you guys, including VanEck and Bitwise, a bunch of these other issuers, they're not just launching ETFs, they're trying to do other things in the space. It's like, I view it as like you're kind of building bridges in both directions, right? You're kind of wrapping in, with your BIDL fund, you're wrapping a TradFi money market treasury type fund in a DeFi wrapper. And you're doing the exact opposite with the Bitcoin ETF and the Ethereum ETF. You're taking a TradFi wrapper and wrapping something that's fully decentralized. So like you have the BIDL fund, like I assume that has been what are the asset levels in the BIDL fund right now?
Not as much as IBIT, but no, but you're exactly right, because some people say, well, you're doing these two things, you're doing this over here, you're doing that over here, they're complete opposite. How does that make any sense? That's contradictory. And actually it makes total sense, because it speaks to the fact that our client base is very diverse in terms of where they're at in their journey and being comfortable with digital asset rails and digital asset infrastructure. And so for some of our clients who aren't there yet, the ability to access Bitcoin through a brokerage account in a traditional finance way in a super accessible, convenient format, that's very compelling. We have other clients who have made this migration, or maybe they're crypto native. They're already in the digital asset space. And for them, that's the wrapper they want. They want to hold tokens. But they want access now to more varied traditional finance type investment underliers. So we're serving both.
All right, guys. We're out of time, but you heard it here first. BlackRock, Bitcoin is not a risk-on asset, and they view Ethereum as a complementary, not competitive asset to Ethereum. So that's all we have time for. Thanks, everyone. Thank you, Robbie.
Thank you, James.
The Bitcoin Conference. We started with a dream to build a community focused on Bitcoin. It all started in 2019 in the heart of San Francisco, the first major Bitcoin conference in years that kickstarted a revolution. And then Miami, a place where enthusiasts, developers, dreamers, and innovators could come together to make Bitcoin better. It has been an amazing 5 years and 8 conferences, thanks to all of you. Bitcoin Conference has become the largest premier global Bitcoin gathering in the world, leading hyper-Bitcoinization. While Miami was incredible, it was time to set the stage for Bitcoin in a new city. So we took the conference on the road. Nashville, Tennessee was the obvious choice, a city known for music and freedom. Next year, the conference is hitting the road again in search of the next global stage. We are headed to a new city next year. With hyper-Bitcoinization right around the corner, we have no plans to take the foot off the gas. Find out where we are headed next. Scan the QR code and be at the main stage for the big announcement.